Business line of credit. A business line of credit is a flexible loan that gives businesses access to a fixed amount of money, which they can use whenever and however they wish. Unlike a traditional loan, a line of credit allows businesses to borrow up to a certain limit and pay interest only on the portion of money that they borrow. They can draw and repay funds as they wish, as long as they do not exceed the maximum credit limit. Use cases. A business line of credit is typically used for short-term working capital needs, including managing cash flow, purchasing inventory, or handling unexpected expenses. It's a good option when a business's revenues are seasonal, or when a business needs to prepare for unexpected costs, best suited for. Business lines of credit are best suited for small to medium-sized businesses that have short-term, variable financing needs. They are particularly useful for businesses that have unpredictable cash flow or those that often have to deal with unexpected expenses. Typical loan amounts. The amount offered for business lines of credit can vary widely depending on the lender and the borrower's creditworthiness, but they typically range from $1,000 to $500,000. Pros and cons of choosing this loan option. Pros of choosing this loan option. Flexibility. You only borrow what you need and pay interest only on the borrowed amount. Reusability. Once you repay what you've borrowed, you can use the available credit again. Helps manage cash flow. It can bridge the gap between the tasks of paying vendors and receiving payment from clients. Cons of choosing this loan option. Interest rates can be higher than traditional loans. There may be additional costs, such as maintenance or draw fees. Requires discipline. Since it's so easy to draw from, businesses must be careful not to overextend themselves. Qualification criteria. Qualification for a business line of credit is typically based on the borrower's credit score, business revenue, and how long the company has been in operation. The minimum credit score required can vary by lender, but typically a score of 600 or above is needed. Typical repayment terms. Repayment terms for business lines of credit can vary, but they are typically short-term loans that need to be repaid within 6 to 12 months. The interest rate can be fixed or variable, and there may be penalties for early repayment. Real-world example. Let's consider a hypothetical business owner named Alex. Alex owns a small construction company that often has to deal with unexpected costs due to changes in project scope or unforeseen issues on the job site. To manage these costs, Alex applies for a business line of credit. When an unexpected cost arises, Alex uses the line of credit to cover the expense, allowing him to keep the project on track without disrupting his cash flow. Once he receives payment for the project, Alex repays the amount he borrowed. This allows him to keep his line of credit available for future projects. How is a business line of credit different from a working capital loan? A business line of credit and a working capital loan are both financial tools that businesses can use to manage cash flow and finance short-term operational needs. However, there are several key differences between the two. Access to funds. A business line of credit provides a revolving source of funds. This means that once you repay the amount you've borrowed, you can borrow it again up to your credit limit. It's similar to a credit card in this way. A working capital loan, on the other hand, provides a lump sum of money up front. Once you repay the loan, the agreement ends. If you need more funds, you would have to apply for a new loan. Use of funds. A business line of credit can be used for any business purpose. It's a flexible source of funds that can be used as needed. A working capital loan is typically used for specific operational costs, such as payroll, rent, or inventory. The lender may require you to specify what the loan will be used for when you apply. Interest payments. With a business line of credit, you only pay interest on the amount you borrow, not on the entire credit limit. With a working capital loan, you pay interest on the entire loan amount, regardless of how much of the funds you actually use. Repayment terms. A business line of credit typically has more flexible repayment terms. You can choose to repay the borrowed amount at any time, as long as you make the minimum payments. A working capital loan usually has a fixed repayment schedule, with regular payments over a set period of time. In the next lesson, we'll learn all about use cases for term loans. If you like this video, be sure to check out the rest of our course on building business credit at mybusinesscredit.com.